Well, Chancellor Angela Merkel and the pro-business Free Democratic Party began talks today on forming Germany's next government. There are already disagreements over taxes and labor regulations on the table. The Free Democrats are seeking deeper tax cuts than the $22 billion pledged by Merkel. So what changes are actually going to happen in the world's biggest exporter? Julian Callow joins us now. He's chief European economist at Barclays Capital. Good afternoon to you, Julian. It looks like the markets are really cheering this Merkel win. The DAX up about 2% right now. How much of a win is it really for the German economy?
I think it's some positive news for the German economy and particularly German financial markets, because what the elections have done is settled a lot of uncertainty here, and they've brought together the Conservatives, the Christian Democrats, along with the Liberals, the Free Democrats. That combination is probably the best one, really, for financial markets, particularly for equity markets, as we set the stage here for a government that ought to be able to undertake some further reforms of the German economy, as you say, to be able to cut taxes, but also to engage in some meaningful deficit reduction. And what's more, some of the state elections, which also happened in Germany yesterday, imply that the Christian Democrats now are holding the power in the upper house, which is very important in order to get legislation pushed through relatively easily in Germany. So I think it's no surprise that the markets have outperformed a bit in Germany just today.
Well, it's interesting because Merkel was speaking today. We keep talking about the potential for tax cuts and a potential positive coming out of it. But today she says there won't be any tax cuts before 2011. So we're looking really farther out on the horizon before that key change.
Well, I mean, I think it's clear that for Merkel it's very important to bring the deficit down. After all, if we go back 4 years to the previous German election, she fought that on the promise to raise value-added tax very substantially in order to bring about additional revenues to bring down the deficit. Now, of course, then we had the recession, and that made the deficit widen out very sharply. But that shows us Chancellor Merkel's instincts, which are very much to keep the German deficit down and under control here. And I think that will be the first priority for the government. Of course, it could be a sticking point in some of the discussions with the Free Democrats. But on the other hand, I expect that the Free Democrats will be very pleased to be part of this new coalition, having been out of government in the last 4 years, and therefore they'll be actually wanting to make life relatively easy and to produce a cohesive strategy.
Julian, I want to ask you, outside of Germany, later this week in Ireland, there's going to be that key vote on the Lisbon Treaty. It's been sort of, I would characterize it as not well telegraphed in terms of what the implications of the Lisbon Treaty would be. Man on the street doesn't necessarily know what it means for business. What's the outlook on that vote, and what's the real impact for business?
Right, well, it does look likely that Ireland will produce an affirmative for the EU treaty at that referendum. The opinion polls are suggesting that. Admittedly, the gap has been narrowing a little bit, but it still looks likely it will be a yes to the treaty. And that, in turn, largely does pave the way, I think, for the
What does it mean
EU
for business, though? What's the benefit there if Intel's lobbying for it, et cetera?
Well, I mean, basically, you have 27 countries within the European Union, and of course others still want to join, most notably Turkey, and therefore it's very important you get a framework in place that enables governments to come together and actually make decisions. And the point is that the previous version of the treaty was not really very workable, and so it's been necessary to have a new version of the treaty in order to actually produce a mechanism to get better change as well. In some respects, it does strengthen power at the European level.
Well, we'll be watching that vote and which way it goes. Thank you so much, Julian Callow of Barclays Capital.